Alrighty, in this video, we're going to go into advanced conceptual selling when it comes down to senior citizens. I got this presentation down within a month and a half of being into the business. At first, I was soliciting more simpler concepts. I don't think this is extremely hard to understand and digest. I guess it just depends on what products your company has available. If you guys can insure, say, up to $30,000, if you're just strictly with a final expense company, this can work. If you solicit term, it could work. Just depends on the insurability age ranges that your carrier or carriers have to offer. So this is basically applicable to anybody in the industry that I know of. I haven't heard of anybody that is not able to sell this regardless of the company or companies they represent. So first things first, we want to dive into Social Security income for seniors. So how it works is you have, two married couple. You have Mary and you have Joe. Let's just say Mary gets, I'm going to make this simple, right? Mary gets $1,000 and let's just say Joe gets $2,000. When one of the spouses passes away, the greater amount stays, the lesser amount is completely gone. So when Joe croaks, Mary will get that $2,000 and this $1,000 is gone. If Joe outlives Mary, the greater of the two, still 2,000, so the 1,000 is gone. No matter who passes away first, this greater amount will go to the surviving party. So what you can do is, if you're pitching final expense, for example, you lead with the final expense transition. You do your intro, you do your transition to final expense. Why'd you guys request this? You get into that, you tie them down, you paint the picture on why final expense life insurance is imperative to have in place, right? Then you transition into this. You tell them, I just want to explain one of the programs that you may qualify for. It's called Social Security Income Protection. Have you guys ever heard of that? 9 times out of 10, they're going to say no. You say, okay, well, this is something you want to take advantage of only if you qualify. You always revolve around qualifying. You don't want to make it seem like life insurance is as easy as cable. You don't pick up the phone and activate your cable or activate internet. There's an approval process. So you tell them, if you qualify, this is something that I highly suggest you guys get in place, and here's how it works. You tell them exactly what I just told you. When you have Social Security income, you have two parties, the spouses that are married to one another. When one of the two passes away, the greater Social Security is inherited. If Mary passes away, Joe gets it. If Joe keeps it, I should say, because he's getting it now. If Joe passes away first, the $1,000 is gone. Mary, you get the $2,000. Now, here's where it becomes a concern. So your total income while you're alive is $3,000. If Mary passes before Joe, so if Mary is gone in this example, we're losing $1,000 per month because Joe gets his $2,000. So Joe, you're missing out on this every single month. So you take this number, multiply it, let's just say by 12. That's 1 year's worth of income protection, $12,000 of coverage. 24, you're not going to write this down in the house until you show them their options. And usually you don't have to write down, 12,000, 24,000, so on and so forth. But I'm just showing you guys the descriptive breakdown on what it is that we're protecting and how we're protecting it. 36,000. Now, if your products cap out at 30,000, for an example, then you could just show 30 months of income protection, right? And when they ask why 30, why is it 12, 24, 30, which they shouldn't, you say, well, it doesn't really need to exceed 30 months of income protection. It gives you more than enough time to get yourself situated. Don't overthink the fact that you guys don't have enough products or coverage. I personally, suggest everybody have more products, more carriers, but if that doesn't float your boat, doesn't fit within your mission, there are people that are doing extremely well with only $30,000 or limited products or just one captive company. So this isn't to sell you on being a broker or anything of that sort. Regardless, no matter who you are, where you are, if you water your grass where you are, the grass will be greener. So this is a breakdown of what it looks like for Mary if Joe outlives her. Same thing on this side. If Joe passes away, this X represents passing away. They're left with $2,000 a month regardless. So no matter who passes away first, the surviving party gets this amount. This is the loss that you're insuring. Loss. $1,000 a month. Same concept here. 1 year worth of income protection, which is 12 months. 12,000. Same thing. 24,000 for 24 months. 36 months. 3 years. 36,000. And how are we getting this number? 1 times 12. Because there's 12 months in a year. If you're selling 1 year's worth of income protection, that's 12,000. 1 times 12 is 12,000. 1 times 24, which is 2 months, 24 months is 24,000. That's how we're getting that number. Now, you can get even more advanced and get into their pension. A pension is something somebody gets after working, say, at a union affiliated company for 30 plus years. You can find out what survivorship options and all that stuff is and figure out what the loss is, but we don't have to get into that much depth. We don't have to get into that subject that that deep because the Social Security alone should give you a fat chunk of coverage to protect the family with on both sides. And it gives you a fat check because the AP or ALP, depending on the verbiage you use, annual life premium or annual premium, is going to be a lot bigger because of the amount you're insuring. So if you're selling final expense, you can jazz it up a little bit. So once you do your options, option 1, option 2, option 3, you can put $12,000 of coverage on Mary, 1 year of income protection for you, 1 year of income protection for you. So you're putting $12,000 on Mary, $12,000 on Joe for option 3. And then you got $10,000 of funeral final expenses. So that's $22,000 of coverage total. $10K to bury you plus $12,000, which is equivalent to $1,000 a month times 12. That's 1 year of income protection. You have $22,000. That could be $22K Mary, $22K Joe. So for option 2, you can do 2 years of income protection. This is if you can exceed $30,000 of coverage. If you're a broker, multiple carriers, you could do that. You guys can always play with these numbers. This is not a standard process on how to add everything up, how to put the packages together. You could do 3 months of income protection. Hey, when he passes away, you need 3 months of income protection to figure things out so you can grieve, so the family doesn't have to go through a devastating process of not knowing how to cover their bills, so on and so forth. You can paint the picture however you want, put the numbers together however you want. It could be 6 months of income protection, $1,000 times 6. But this gives you the option or the ability to insure both of them, put packages on both of them, insure their funeral, their some final expenses. If you want to make it, you want to max them out at $30,000. Some carriers go up to $40,000. Some carriers go up to $50,000 of final expense. And you can, if you're a broker, you can solicit multiple carriers. You can put them with carrier 1, carrier 2, carrier 3, just to make the numbers make sense. I've sold clients that collectively make $3-4 grand a month, $500, $600, $700 a month, right? You can max out your clients because they see the value in this. If you go in there and say you need $36,000 of coverage on you and $50,000 of coverage on you, there's no concept, there's no urgency, there's no visualization behind it, there's no story, there's no emotional influence. Good luck. When you break it down like this, they see the value in it. And you don't always have to write down all these numbers to put your client in analysis paralysis. As long as you know 12 months, you can market 12K, you can add all your numbers up and you say, look, this is going to get you 1 year of income protection. It's going to cover your funeral. Joe, this is going to get you 1 year's worth of income protection and it's going to cover your funeral. Now you guys can get a little advanced with it. If there's an accidental death benefit rider, let's just say it matches the initial coverage. So if you have 10K of whole life and the ADB rider at your company matches it. So they get 10K of ADB. Now this varies from company to company. Some companies could give them 50 grand of ADB for an additional price. Some companies have it included as a additional rider at no cost regardless. Find out what that number is. You'll know how to jazz it from there. You say, look, if you pass away naturally, Mary, this is only if they have the accidental death benefit rider. And in this example, it's going to be 12K. Let's just call it, since it's a 12K of whole life that we're selling them for the income protection. So Mary, look, if you pass away due to an accident, it's going to pay out $12,000 of whole life. This is if you're selling them 1 year's income protection. I'm sorry, if you pass away naturally, it's going to pay out $12,000 of whole life. If you pass away due to an accident, it's going to pay out 2 years worth of income protection and no extra cost. So if you pass away naturally, it's $12,000. If you pass away due to an accident, you're going to get double that. So it gives you 2 years of income protection. So guys, this is all conceptual selling. If you know your numbers, you know how to break it down. It's easy to put the packages together. You guys can practice this on your own. Pretend you're presenting it to whomever, a friend, a family member, to yourself. Keep doing this over and over and over again. For every equation out there, there's a formula. And this is the formula to basically to show them the value of having Social Security income protection in place. So practice this over and over again. Make sure that you're doing different numbers, different scenarios, different examples, right? And it'll help you with repetition to easily put this together. Now, this is meant for people that are in person, maybe on Zoom. If you have a process that gets your clients on Zoom effortlessly, seniors especially, this is who it's applicable to, then you could do this. You could do something like this. I do have a diagram. More than likely, there will be a PDF that you're more than welcome to use. I've used it. My agents have used it that I put together that helps kind of put everything into place. It's like a PDF that already has, you just got to fill in the blanks and then add, subtract, multiply to get your numbers. So with that said, I hope this was of value and of help to you, and stay tuned for the next video.